Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Phil Mackintosh, chief economist at Nasdaq, to discuss progress on COVID-19 vaccinations, earnings, and the economy on this historic day, the inauguration of the 46th president of the United States, Joe Biden. And Phil, Biden is certainly coming in with the momentous task of getting America back on track as we look to the other side of the pandemic. How do we look with data and vaccination logistics at this point?
Yeah, I mean, the vaccinations are progressing pretty well. I know it got off to a slow start, but every day it looks like there's been more and more vaccinations. We're getting close to doing 1 million vaccinations a day now, and around about 4% of the population is already vaccinated. So the progress on the vaccination front is getting better. And I think the market expects that by the time we get to summer, there'll be pretty widespread vaccinations. The vaccinations look really effective. So we should start to see a big decline in new coronavirus cases. Hospitalizations and deaths should improve a lot. So because of that, the forecast for earnings, the forecast for a lot of the company metrics are actually looking pretty good as we get close to the end of this year.
And while the focus has been on COVID-19 and getting through Inauguration Day, we are in the middle of earnings season. What are your expectations here?
Yeah, I mean, looking at the market-wide expectations, we actually saw a pretty good Q3, especially compared to Q1 and Q2 with massive drawdowns because of all of the quarantines and shutdowns. But we know that there's been an increase in quarantining and shutdowns in Q4. And so the market has priced in expectations of a small decrease on the previous quarter for Q4 and also at the moment for Q1 this year, just because of the second wave of coronavirus globally. But looking out further than that, the market's actually got expectations of earnings going up past pre-COVID levels. And that's really why the market's valuations are close to all-time highs as well, because the expectation is once we get the vaccine rolling, all the stimulus in the system will start to come through into the services sector, which has obviously been worst hit by the coronavirus, and we'll start to see some of the earnings in those companies pick up as well.
Let's shift gears and turn to the economy, starting with oil. Demand is still pretty weak here despite the recent run up. And you also have to think, the new administration is certainly focused on alternative sources of energy as well.
Yeah, almost two sides of the same question, isn't it? I mean, the reality is the demand for oil is still low because things like airlines just aren't being utilized anywhere near 50% capacity from pre-coronavirus levels. So that's one of those things that the demand for oil is still just not there, even though we've had supply cutbacks from some of the big producers that have helped prices kind of stabilize at about $50, which is starting to affect inflation in some areas. The demand for oil shows that the economy is still nowhere near the levels that some of the other manufacturing and goods and retail spend data has been indicating. There's a V shape, but it's not like we're back to pre-coronavirus levels in terms of oil consumption at all. But what's interesting is with the second wave of coronavirus, which we saw months ago, there's been a general expectation that things would get worse in other areas as well. And we just really hadn't seen that until the last couple of weeks. And so if you look at retail sales, the last couple of prints of retail sales have actually been negative. If you look at the consumer confidence indexes, they've stopped improving and people are still pretty nervous. And just today, we look at the NAHB index. So, housing market looks like it's softening as well. So it really does look like this second wave of coronavirus is proving to be a bit of a headwind for Q4 into Q1.
And employment continues to remain weak as well.
Yeah, that's true. So we've had a couple, similar to the retail spending data, we've had a couple of recent prints which are not good for employment. But the other thing with the employment number is if you look at where we are in terms of unemployment, sure, we've had 10 million jobs come back, but we still are $10 million jobs short of pre-coronavirus levels. And part of that's because the services sector, which employs so many people, is affected by things like social distancing and all the quarantining. So another good reason to get the vaccine rolling and get it out, because that's going to be the key to getting the economy going in 2021.
And finally, let's wrap up with industrial production and manufacturing. What are you seeing there?
I mean, that's another one of those data points. It just highlights how different the sort of the spending patterns have been through coronavirus. So manufacturing, industrial production, the goods side of the economy has actually been really strong, and it remains sort of above pre-coronavirus levels. It's the services sector that's hurting. And so the last couple of prints industrial production data have again been strong. And so you'll see a lot of good data coming out on the good side of the economy because the good side of the economy is doing really well. It's the services side of the economy that's hurting.
All right, Phil, great stuff. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.